Good morning, everyone. This is Charalambos Pissouros, senior analyst at IronFX, bringing you the morning comment for the 17th of March. The euro enjoyed another round of increased demand yesterday following some comments from Nowotny, the Austrian ECB Governing Council member. The policymaker said that when the time comes, the ECB would not have to increase all three of its interest rates simultaneously, nor to the same extent, and indicated that the deposit rate could be raised before the other two. He further added that the bank will decide at a later time whether it will raise rates before or after it ends its QE program. Although he did not directly indicate any timeline or anything more specific with regards to policy normalization, just the fact that there is discussion around this topic was enough to cause euro-dollar to resume its latest rally. The pair was resting near the 107.10 level ahead of Nowotny's comments and surged on his remarks to break above the resistance now turned into support barrier of 107.55. The short-term bias remains positive, and as such we expect the rate to challenge the very important territory of 108 soon, if not today. Given that core inflation has not begun to accelerate yet, we consider it far too early to be discussing when the ECB may actually begin to normalize. However, should the subject of normalization continue to gain attention, the euro is likely to remain supported, we think. Having said that, we still have the French elections ahead of us and the risk of Le Pen being elected. As we approach the election day, we see the possibility for the common currency to correct lower in case Le Pen starts to gain back ground in the polls. From a technical standpoint, although the short-term picture looks positive, we would like to see a clear close above 108 and the downtrend line taken from the peak of the 3rd of May before we get confident on larger bullish extensions. Such a break would signal the completion of an inverted head and shoulders formation, and in combination with a potential defeat of Le Pen, it could lead to a medium-term trend reversal. Now moving to the UK, the Bank of England kept its stimulus program unchanged yesterday via an 8-1 vote against the consensus of doing so unanimously. The dissenter was Kristin Forbes, who favored for a hike, as in her view inflation was rising quickly and the pre-referendum concerns about potential slowdown in growth had not materialized. Her dissent sent sterling higher immediately, but that was not all for GBP. The currency extended its gains as market participants scrolled through the meeting minutes and found more hawkish signals. The minutes showed that some members would consider a reduction in monetary stimulus should there be any further upside news on the prospects for growth or inflation. This is a considerable shift in rhetoric from the Monetary Policy Committee, who until the latest meeting indicated that most members remain willing to look through above target inflation. GBP USD shot up from 122.45, broke the resistance now turned into support of 123 and hit the 123.75 barrier. We expect the pound to continue trading higher for a while, and if the bulls are strong enough to overcome the 123.75 resistance, then we may see a test near the downside resistance line taken from the peak of the 2nd of February or near the 124.70 zone. In our view, a clearing of these resistance territories is possible to carry larger upside extensions, given that the latest rebound came from near the lower bound of a medium-term sideways range that has been containing the price action since the 7th of October, between 121 and 128.50. Now, with regards to the future gatherings of the bank, yesterday's undeniably hawkish signals suggest that as UK inflation accelerates further, we are likely to get more dissenters in coming months, assuming that economic growth remains robust. Something like that could offset some of the downward pressure on sterling that might result from the Brexit negotiations should the UK government continue to pursue a hard Brexit. As for today, during the European day, we have a relatively light data calendar. The only noteworthy economic indicator we get is Eurozone's trade balance for January, though no forecast is available. In the US, industrial production for February is due out and expectations are for a rebound in the figure. The preliminary University of Michigan Consumer Sentiment Index for March is coming out as well, and the forecast is for an increase. As for the rest of the economic events, the G20 central bank governors and finance ministers will meet in Germany. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.